You paid more in taxes last year than Apple paid on $252 billion. Not as a percentage, in absolute dollars. You earning whatever you earn contributed more to the United States Treasury than the most profitable corporation in human history paid on $250 billion accumulated offshore. This is an exaggeration. This is documented fact verified by the United States Senate in 2013. Confirmed by Apple's own financial disclosures filed with the Securities and Exchange Commission, the iPhone in your pocket was built by a company that structured itself to pay less tax than you do on your salary. And it's completely legal. When Tim Cook sat before the Senate Permanent Subcommittee on Investigations in May 2013, he didn't apologize, didn't claim ignorance, didn't promise reform. He calmly explained that Apple pays every dollar of tax it owes under the law. And he was telling the truth. Because the law was written to ensure Apple would owe almost nothing. The system wasn't broken. It was working exactly as designed, to let corporations accumulate wealth beyond the reach of taxation while you fund the roads they use to ship products, the courts they use to enforce patents, the military that protects their global supply chains. Everything. You pay for everything while they contribute practically nothing. The strategy has a name that sounds almost whimsical until you understand its purpose. The double Irish with a Dutch sandwich. A structure so brilliantly engineered that it allowed Apple to move hundreds of billions of dollars through phantom companies that exist only on paper. Subsidiaries incorporated in Ireland but managed from California. Entities with no employee, no offices, no physical presence beyond a registered address at a law firm. Yet these ghost companies legally owned the most valuable intellectual property on earth. Every Apple patent outside the Americas, every trademark, every line of code worth hundreds of billions, and as profits flowed from iPhone sales in London and Tokyo and Sydney, they didn't go to Cupertino. They went to these Irish phantoms. Two companies engineered to be tax residents of nowhere. This investigation analyzes the United States Senate report from 2013 and Apple's public financial filings. All sources are cited in the description below. Ireland in the 1980s was desperate. The economy was failing. Young people were leaving. Unemployment was crushing. So lawmakers created what they thought was a clever incentive. A company could be incorporated in Ireland, but if it was managed and controlled from somewhere else, it wouldn't owe Irish taxes. The logic seems sound. Attract foreign companies, create some jobs, even if those companies weren't really Irish for tax purposes. But here's what they didn't anticipate. Under American law, a company incorporated in Ireland was considered Irish, foreign, not subject to U.S. taxes on foreign income. So the same entity could be Irish under U.S. rules and non-Irish under Irish rules, existing in both legal systems, belonging to neither. A corporate ghost paying taxes to no government on earth. American technology companies discovered this almost immediately, not through illegal means, through expensive lawyers and big four accounting firms who marketed it as international tax planning. Microsoft pioneered the approach. Oracle followed. By the early 2000s, this wasn't a secret exploit. It was standard operating procedure taught at business schools, recommended in boardrooms, implemented by every sophisticated multinational with valuable intellectual property. And Apple weaponized it, took the basic concept and added layers of complexity that made the structure nearly impenetrable to regulators. They started with Apple Operations International, incorporated in Cork, Ireland in 1980, registered at a law office. No employees anywhere on earth. Board meetings held in Cupertino, California. So under Irish law, not tax resident in Ireland because it was controlled from America. Under American law, not tax resident in America because it was incorporated in Ireland. Tax resident nowhere. This entity would own all rights to Apple intellectual property for markets outside the Americas. When someone in Germany bought an iPhone, legally they were buying from this Irish ghost. And the profits belonged to a company that paid no corporate tax to any nation. But even Ireland's low 12.5% rate was too much. So Apple created another layer, Apple Sales International, also Irish, also Fernam. This subsidiary would actually sell products, generate revenue, show profits on paper, but it would pay massive licensing fees to Apple Operations International for the use of that intellectual property. Fees so enormous, they eliminated nearly all taxable income. So Apple Sales International showed minimal profit in Ireland, and Apple Operations International received billions in licensing fees while being tax resident nowhere. The money appeared, then legally vanished. The Senate investigation discovered something that should have sparked revolution. In 2011 alone, Apple Operations International reported $22 billion in income, $22 billion, and paid zero corporate tax to any government, anywhere on Earth. Senator Carl Levin held up the documentation during the hearing and asked the question that millions wanted answered. How is it possible for a company to earn $22 billion and pay nothing? Apple's lawyers explained calmly, the company exists in a gap between tax systems. Irish law says it's foreign. American law says it's Irish. It belongs to no jurisdiction, owes tax to no authority, completely legal, completely intentional, completely approved by both governments. But there was still a technical problem. Moving money from Apple Sales International to Apple Operations International could trigger Irish withholding taxes, a percentage skimmed off payments leaving the country. So Apple added the Dutch component, the sandwich. They created a Dutch subsidiary that existed purely as a conduit. Money would flow from Irish sales to the Dutch entity to Irish operations. And because of tax treaties between Ireland and the Netherlands, no withholding, the cash passed through untouched. 3 jurisdictions, 0 taxation. This was the double Irish with a Dutch sandwich, a structure that would eventually move more than $250 billion beyond the reach of every tax authority on Earth. By 2017, Apple had accumulated $252 billion offshore, more than the gross domestic product of Finland, more than the market value of most Fortune 500 companies. Just sitting there. In subsidiaries, in accounts, in investments, all legally beyond taxation, growing, compounding, generating returns that also went untaxed because the returns belonged to the same phantom entities. An entire shadow economy controlled by one corporation, invisible to governments, untouchable by law. And Apple was just the most successful. Google used nearly identical structures, routed over $100 billion through Ireland to Bermuda. Facebook did it, Amazon, Microsoft, every major technology company, all using variations of the same strategy, all moving hundreds of billions offshore, all paying effective tax rates below 5% while their employees paid. The big 4 accounting firms marketed these structures like products. Deloitte had templates. PricewaterhouseCoopers had specialists. They would set up the entities, file the paperwork, create the flow of funds, all for fees in the hundreds of thousands, a bargain when the tax savings ran into billions. But how did governments respond? That's the question that reveals everything, that shows you the system isn't broken but perfectly calibrated to produce exactly this outcome. If you're starting to feel that sickness in your gut, that recognition that you've been funding a system designed to exploit you, then you need to see what happened when they tried to stop it. Subscribe now, because what comes next proves reform was never the goal. Protection was. And the people who could have changed this chose not to deliberately. The United States Senate investigation in 2013 was devastating. Months of analysis, thousands of pages of documents, testimony under oath from Apple. Senator Levin presented irrefutable evidence that Apple Operations International was tax resident nowhere, that it earned $22 billion in a single year and paid 0 tax, that the double Irish structure was designed specifically to avoid taxation. Tim Cook sat calmly and defended it all, said Apple follows the law, pays what it owes, insisted the company was the largest taxpayer in America, which was true for domestic operations. But on the $252 billion offshore, practically nothing. And when senators demanded Apple pay its fair share, Cook said they already were, under current law. Senators proposed legislation immediately. The Stop Tax Haven Abuse Act would have required American companies to pay U.S. taxes on foreign profits annually. No deferral, no offshore accumulation, just immediate taxation, regardless of where the subsidiary was located. The bill had bipartisan support initially. Public outrage was real. Media coverage was extensive. This should have passed ISLIA, and it died. Never reached a vote, killed in committee through procedural maneuvers. Because while senators were holding hearings, Apple was spending $4 million on lobbying in 2013 alone. Google spent $17 million. Microsoft spent $10 million. The tech industry poured hundreds of millions into Washington funding campaigns, funding think tanks that published papers defending offshore structures, funding economists who testified that reform would hurt American competitiveness. The legislation died quietly, and nothing changed. But the European Union tried. Ireland's arrangement with Apple was too blatant, too obviously preferential treatment that violated state aid rules. In August 2016, the European Commission issued a ruling. Ireland had given Apple illegal tax benefits. The sweetheart deal that let Apple Operations International pay almost no tax while technically being Irish with state aid. Illegal under EU law. The Commission ordered Apple to pay 13 billion euros in back taxes. 13 billion, Ireland's own money, owed to Ireland. And Ireland refused to collect it. Actually refused. The Irish government sided with Apple against its own tax authority because Ireland wanted to preserve its reputation as business-friendly, wanted to keep attracting multinationals even if it meant foregoing billions in legitimate tax revenue. Apple appealed the ruling. Ireland supported Apple's appeal. Together, they fought the European Commission in court. And in July 2020, the General Court of the European Union ruled in Apple's favor. The $13 billion didn't have to be paid. The tax arrangement was legal under Irish law, even if it resulted in almost no taxation. The Commission had overstepped. Apple could keep the money. The system protected itself again. But by that point, Ireland had officially closed the double Irish loophole anyway. Announced in 2014 that companies could no longer be incorporated in Ireland while tax resident nowhere, effective 2020. But here's the critical detail. They grandfathered existing structures, gave companies 6 years to transition, 6 years to move money, 6 years to establish new arrangements, and Apple did exactly that. Shifted operations to Jersey, a British Crown dependency with even more favorable treatment, moved the structure, kept the outcome, still offshore, still minimally taxed, just a different jurisdiction. Do you see the pattern? Every time a loophole closes, a new one opens. Every time regulators act. Companies adapt because they have resources governments don't. They have lawyers who specialize in nothing but finding gaps in tax law. They have accountants who design structures full-time. They have consultants who advise on which jurisdictions offer the best terms. And they have money, unlimited money to lobby, to litigate, to delay, to outlast any reform effort. The game is rigged not because rules are broken, but because the people who benefit from the rules write them. But what about that $252 billion offshore? The 2017 tax legislation gave corporations a repatriation holiday, reduced rate for bringing money back. 15% on cash, 8% on other assets. Apple participated, brought back a substantial portion, paid the reduced rate. And the government celebrated, called it billions in new revenue. But do the basic math. Apple avoided 35% taxation for decades by keeping money offshore, then paid 8% when the government offered a deal. They saved hundreds of billions by forcing America to compete with tax havens instead of taxing properly. The system rewarded their avoidance, made it rational, profitable, necessary. And what did Apple do with the repatriated cash? Stock buybacks. Tens of billions purchasing their own shares, driving up stock price, enriching shareholders and executives whose compensation is tied to share performance, not building American factories, not hiring American workers, not investing in research and development, just financial engineering that benefits wealthy stockholders, many of whom aren't even American. The offshore profits that should have funded infrastructure and education went to Wall Street. The wealth extraction was complete. Legal. Celebrated as smart capital allocation. But here's what they don't tell you. What nobody wants you to calculate. Corporate offshore tax avoidance costs the United States over $100 billion annually every year. From all companies using these structures That's 1 trillion per decade. Money that should fund healthcare, education, infrastructure, debt reduction. Instead, it accumulates in offshore accounts, grows for shareholders, while you pay more, while services get cut, while bridges collapse, while schools deteriorate. The burden shifts from corporations to individuals, from capital to labor, from those who own everything to those who have nothing. And Apple remains unapologetic. Publishes offshore totals in annual reports, explains strategies to investors, celebrates tax efficiency in earnings presentations, frames it as maximizing shareholder value, and legally they're required to. Directors have fiduciary duties, must minimize taxes within the law. Offshore structures are legal, therefore using them isn't optional. It's mandatory. Any CEO who refused would be sued by shareholders, replaced by the board. The system doesn't permit ethical choices. It demands extraction. This creates a competitive race. If Apple pays 2%, Google must match it or face investor pressure. If Amazon must too. The race to the bottom becomes compulsory. Any company paying full freight would be punished by markets. Stock would decline. Activists would attack. Management would be terminated. The system doesn't reward good corporate citizenship. It destroys it. Makes tax avoidance a survival requirement. But here's the question that should haunt you. If this is legal, if it's proper, if it's just business, then why does it feel like theft? Why does every instinct tell you something is fundamentally wrong when you pay 24% while Apple pays 2%? Because your instincts are correct. This isn't capitalism. This isn't free markets rewarding efficiency. This is power. Money so concentrated it can rewrite rules, purchase favorable legislation, ensure that wealth, once accumulated, never contributes to the society that enabled its creation. When Apple moves $252 billion offshore, what do you pay on every dollar? That's not a malfunction. That's the system working precisely as designed by corporations. For corporations, protected by politicians, they fund, implemented by accountants, they employ, defended by lawyers, they retain, and accepted by a public convinced that someday, somehow, they might benefit too, but you won't. The doors are closed. The ladder is gone. The offshore system exists exclusively to ensure that corporate wealth never disperses, never contributes, never serves any purpose beyond enriching those who already control everything. If this is revealed that you subsidize companies paying nothing, if you understand Apple's $250 billion offshore means you fund their infrastructure while they fund nothing. If you see that reform failed because the system protects itself, then you need to know what we're exposing next. Subscribe now, because the next investigation reveals who built these structures. How Deloitte and PricewaterhouseCoopers sell tax avoidance as consulting services. How the Big Four make billions designing the schemes that cost you everything. And why the people who audit corporations also teach them how to cheat. The conflict is total. The corruption is legal. And the next episode names names. The double Irish is officially dead. Ireland closed it, but nothing changed. Companies use Singapore now. Luxembourg. Swiss structures. The jurisdictions rotate. The techniques evolve, but the outcome never varies. Profits flow offshore, taxes disappear, you fund everything, the roads, the courts, the military, the universities that educated their engineers, the research that created their technology, the legal system that enforces their patents globally. You pay for all of it, while they contribute almost nothing. And call it innovation, call it disruption, call it the future. Apple's $252 billion offshore is a monument to corporate supremacy, to captured democracy, to a system where the richest pay less than the poorest, where legal equals acceptable, where shareholders matter more than citizens, where two systems exist, one for you with inescapable obligations, one for them with infinite options, and the gap between those systems. That's where your future was sold. Every time you buy an iPhone, understand where the money goes. Some funds engineering, some funds manufacturing, but billions flow through Irish phantoms to offshore havens where it grows untaxed. You're not just purchasing a phone. You're funding the extraction, participating in your own exploitation, paying them to avoid paying, and you have no alternative, no choice, no escape, just compliance, just acceptance, just quiet participation in a system designed to transfer wealth from your pocket to theirs permanently. The corporate inversion scam isn't about one company or one loophole. It's about a global architecture constructed by money to protect money, where obligations flow downward and exemptions flow up, where you owe duties and they claim rights, where the social contract binds you but not them, where $250 billion can exist beyond every government on earth while you and hide $1 without prison. The asymmetry is absolute. The capture is complete. The future is written: more wealth offshore, more taxes on you, more extraction forever, until the mathematics fail, until societies collapse under the weight of inequality they can no longer sustain, until people recognize they're funding their own dispossession and demand something other than reform, something beyond legislation, something fundamental. But by then, the wealth will be gone, protected, offshored, beyond reach, and you'll have nothing except the knowledge that you paid for the system that destroyed you. Wake up, calculate the theft. Apple moved $252 billion beyond taxation, legally, with government approval, while you paid thousands on tens of thousands. This is the system working. This is capitalism's final form. This is your future. Unless you see it, unless you reject it, unless you understand that the rules were written by those they benefit, and you were never meant to win.